Welcome back to Investing with Confidence. I am your host, Joshua David. Always having a great time in studio. And if you're just tuning in, Al was shedding some light on what is the public being pumped into as far as information from news, TV, internet, the stuff that we can get an opinion on, but how we can use core strategy or a rules-based strategy to make better investing decisions. If you happen to miss 2 tickets for the investing class, call 952-814-4410. You can also go and register online by going to learnwithota.com. So, Al, I mentioned in the last segment that I want to get into like retirement or your savings for life.
Sure.
What are those instruments or those vehicles to get there, right? You have 401ks, TSPs, 403bs, and then you have IRAs, whether they're traditional or Roth. Now, we have a lot of listeners that do have 401ks, but also have IRAs as well. Now, let's talk about some of the differences between 401ks and IRAs. So let's talk about the difference between a 401k and a IRA. What is that difference?
Yeah, the 401k, 403bs, those are employer-sponsored retirement plans where, it's kind of sold to you as this great thing. If you get a job there and they have a 401k, they're going to say, hey, we have a 401k. We provide a 401k for you. And it's a great vehicle to kind of force you to put some money aside for retirement. In many, if not most cases, the employer will provide a match. A certain percent of what you put in, the employer will match.
Which is a great thing.
Which is the best thing because that's free money, and that's something you want to take advantage of. But here is the problem. Most people, when they look at the 401k, they maybe have a meeting with a sponsor where the sponsor will say, well, here is a list of things that you can invest in. Typically, they're mutual funds, maybe some exchange-traded funds, now some of the 401ks. And I'm just using the term 401k, but it really includes all of the employer-sponsored plans. But in the assets that are in there, maybe some of them provide stocks now. But typically what happens is that they show you this list, and then you make the decisions as to what you put your money into. And every time you get a paycheck, then a part of your paycheck is put into that particular component or components of the 401k that you have chosen. Then, unfortunately, what happens is that people forget about it.
They don't even look at it.
They don't even look at it. They might look at it once in a while. As long as the number seems bigger this time than it was last time, they may be happy. But most people put this on cruise control. And remember that part of the growth of those 401ks comes from you and from the employer. So it's money that's given to you. It's not necessarily the growth of the investments that you are actually in. Oftentimes, those are very mediocre in their returns. They have high fees, and as much as maybe 50% or more of what you could have in that 401k over the course of your working years, if you start in your 20s, is gone. I mean, that could have been 40, 50, 60% higher had the fees not been there. And so that's what happens with the 401k. People just kind of put money in there. They really don't know that much about what's in their 401ks. We, every once in a while, will challenge people when you get home, take a piece of paper and write down, don't look at your statement, but write down everything that's in your 401k. And then next to that, why you invested in that particular asset. Most people can't do that. They don't know what's in their 401ks, and they don't know that they can actually trade within those accounts.
Yeah.
You're limited as to what you can choose, but that doesn't mean that you can't rotate from, say, one investment into another, because whatever you have access to there will be some things that are outperforming and some that are underperforming, some that will perform better in certain economic situations and some that are going to underperform. There's no reason you can't, rotate between those as long as you know which ones to rotate out of and which ones to rotate into. They all have charts that you can follow. They're all charts that you can look at, and you can determine if you have the right education, the right training on how to read those charts. You can determine whether maybe you want to get out of one because it's moving into an area where there are a lot of sellers, and you want to get into something else where there are a lot of buyers. Or maybe you just want to go into a cash equivalent type of an account, a money market or some type of a fixed income vehicle while the market is correcting.
Yeah, and that's why, we've been talking this whole show about core strategy, understanding the strategy to make those decisions, even within your retirement
Right.
accounts. I mean, people think that you can't do anything with your 401k
Right.
or company sponsored plan. Well, that is your money. You may have limitations, but all you have to do is ask, can
Hmm.
you make those decisions? Can you change things? But if we see markets coming into an area where we might see the market go down, would it make sense to potentially take your profits? I would say it might make sense, but you have to have a plan to
Yeah.
do that.
I'm going to say it's more than might make sense. It's necessary because when
Sure.
you retire, now your income from your job is gone. What you have to rely on now might just be what's in that retirement account. And if you let the market take it away, take 10%, 20%, 50, back in 2008, a lot of people lost 50 to 60% of what they had worked maybe 40 years for.
Yeah.
It's hard to start over when you're in your 70s.
Yep. And as we're doing this, I mean, if you have questions on the live stream on YouTube, definitely type them in. We'll try to answer any questions you have as we go through here. But Al, with the fees that people are getting and missing out on a lot of those gains, you're missing out on the compounding interest.
That's exactly right.
And you give a lot more details on how that might be happening, what you might potentially be able to do in these investing classes. So if you want to learn more about the 401k, you got to come to one of these classes that Al teaches. So if I want to invite you to this class, we do them during the week and also on the weekend. So right now you can call 952-814-4410. That's 952-814-4410 to come into one of these free investing classes. Now we have IRAs as well.
Correct.
So it's another retirement plan. It's a qualified retirement plan. Now there is Roth, there's traditional. One is tax deferred. One you're able to lower your taxable income now and pay the taxes later. Let's talk about the difference. Let's start with the Roth IRA. What is that designed for, and who might benefit using those based on their age?
Yeah, the Roth is a perfect vehicle for people that feel that they can grow the investment dollars. So in other words, whatever you contribute to that retirement account, to that Roth retirement account, the big number at the end of of your life, so to speak, or whenever you're taking money out, the big number you want to come from the growth of the investment. And that all comes out tax-free. The money that goes in is already taxed, so the government's not going to tax you again on that, but they will let all of the growth on that money come out tax-free. That's a huge advantage because when you retire, you may not be in a lower tax bracket. We've kind of been conditioned to believe we will, but look at the debt we have. We're adding trillions of dollars almost on a daily basis to our debt. At some point in time, that has to be paid back. Taxes will go up. So when you retire, if you have a traditional IRA or a 401k, the money that comes out is going to be taxed. The reason in a traditional IRA it's taxed is that the money that goes in is pre-tax money. So you haven't been taxed on that. And what does the government look at? Every dollar you earn, what do they look at that as? Something that
It's taxable income.
Yeah, they own a part of that, and then they're going to take a part of it. So anything that you have in a regular employer-sponsored plan, unless it happens to be like a Roth 401k, or in a traditional IRA, will be taxed. So if you can set up a Roth IRA, we're not giving tax advice, but go to a tax advisor, a CPA, and see if you qualify for a Roth IRA. If you do, that's a great vehicle because, again, all of the growth, and if you take advantage of the assets that are available that can increase your rate of return, that growth can be substantial. And if it all comes out tax-free, it's a huge difference between that and what happens to your traditional IRA that may be taxed at 20, 30, maybe, who knows, 40% or more when you retire.
Yeah, and think about that. If you're over 59 and a half, you can take capital out of your IRA without penalty.
Correct.
So that's why, a lot of people that are over 59 and a half love to trade and invest in their Roth because what Al is talking about with those with the gains that you have in there, they're not taxed.
Yep.
And that's the best time to do that, especially because if you're 59 and a half or older, those are the best times of your year. You're kind of at maybe second, third quarter of your life. You still have many, many years. So if you're able to learn a skill, learn a technique that could potentially give you gains, why have them taxed during retirement years? And everybody says, "Oh, I live on a fixed income." Well, create something.
Right.
Learn a skill, learn a technique to potentially do that. If you want to learn more information about that, Al teaches these investing classes and talks different strategies and techniques that are available within 401ks, that are available within IRAs, whether it's a Roth or it's a traditional, and what you might have access to that you just don't know about. So I want to invite you to this investing class right here in Bloomington. They're only 2 hours. They're free. And callers 1 through 10, call 952-814-4410. That's 952-814-4410. When you call in right now, you'll receive the retirement planner. Coming up next, Al, I want to continue some more talk on some stocks, what's happening moving forward, and especially with the U.S. dollar, what can potentially happen with that creating moves in the stock market.
Okay.
We'll be right back.